Welcome back. Well, as promised, let's get in. The management of Bank of India came out with its results just a while back. This has been the strongest quarter for the lender in terms of asset quality in 7 years, and its net interest income also saw a 25% jump. To discuss this and a lot more, since the stock is up 5% as well, we have with us Mr. A.K. Das, the MD and CEO of the bank, joining us now. Mr. Das, good afternoon. Thanks a lot for joining us. Well, the street is giving a thumbs up to the numbers that the bank has just reported because it has been the best asset quality in 7 years. But let me first start by asking you on the net interest margins because I wanted to know what that number was this time around, and is that level sustainable at current levels?
Yeah, thank you and good afternoon, and thanks for having me. Yes, decent set of numbers, profits and profitability both. As you rightly told, NIM has been the cynosure this time. Our global NIM is 3.04 and domestic is 3.49. And I must tell you, domestic has 86% of my loan book. So that's a substantially improved number. As regards sustainability, I must say that there are challenges to sustain that number, primarily because of the fact that when this interest rate movement is happening, so repricing is happening both on the assets and liabilities side. And as against assets, liabilities have a longer lag to get repriced. So obviously there will be some impact going forward, some erosion going forward, but definitely our aim is to keep it at 3 or above. So now the credit pickup has happened, and I think it's going to further improve in the Q3. I'm sure it should not be a problem to keep it above 3 in the remaining 2 quarters.
Okay, so we could see some moderation in the net interest margins, but it will hold above 3% as you start increasing the rates on the deposits as well. So can you talk about this credit growth? Your advances growth is at 21.5% on a year-on-year basis, very strong. What's driving it? Which are the sectors where you are seeing a pickup? And what's the guidance on the loan growth for the full year?
Okay. So overall, global growth has been 17% in gross advances. However, domestic has been little moderate at 12%. And there has been 34,000 incremental growth in advances, which has been equally contributed by overseas and the domestic arena. Now, within the domestic arena, 12% growth, corporate credit has grown only by 6%, whereas RAM has grown by 15.75%, driven primarily by retail 23%, agri 19%, and MSME at a somewhat moderate 9%. So as you know, we are expecting some pickup in corporate credit because we have not seen a full-blown recovery as yet in corporate credit demand. There are some green shoots visible, but I think it will take up to Q3 end to find out that kind of a number. And corporate credit growth gives us the critical mass as compared to RAM segment. So I think by Q3 and Q4 we may see good improvement in corporate credit. So I feel in the beginning of the year I had given a guidance of 8 to 10% growth, and I think by the end of the year it should be hovering around 12% on a very conservative basis.
Okay.
And of course, if the corporate credit picks up, like all we have been yearning for, I think it could be even more. So 12% is the minimum growth that I will be looking at.
Okay, 12% minimum growth. Of course, that's conservative because Q2 has been so strong for you this time around, Mr. Das. Can you give us a sense of what was the movement in terms of gross NPAs? What was the slippage amount and slippage ratio this time around? And what is the recovery number as well here?
Yeah, our slippage numbers has been very good indeed. In fact, that has been one of the major factors for our P&L. Total slippage was only about 1,200 crore in the entire quarter. I'm talking about net slippages because recovery action also is going on. And as against 1,200 crore, our cash recovery and upgradation put together has been around 1,800 crore. So we are in positive territory like in the previous quarters. So that said, this has given us a good leeway to fall in line with our initial commitment that will bring down the gross NPA ratio below 8%, and today at 8.51% we are well on course to do that. Net NPA ratio also we have brought it down below 2%. So I think going forward, assuming, and we have achieved these numbers also, 2,500 crore recovery per quarter and at the most 1,000 crore slippage, I think it should be possible for us to come down much below 8% by the end of the year. Plus, of course, 34,000 out of the 42,000 NPR in NCLT, wherein we don't have much of a control. But the remaining 9 to 10,000 crore, we are focusing through various means involving all our field personnel, and plus NARCL transfer to the tune of about 283 crore on the cards, and about 1,200 to 1,500 crore recovery expected in NCLT accounts during the remaining 2 quarters. I think we should be definitely much below 8% by the end of the year.
So just to get the numbers right, you're saying the quarterly slippages run rate could be close to 1,000 crore from here on?
It's not close to, it's the MTL, maximum tolerance limit, that we have decided, we have imposed on ourselves. And this quarter also we was about 1,037 crore fresh slippages. So it could be even less because our SMA numbers we have targeted to bring down to 10,000 max. So with all these efforts and recoveries being much more than the slippages, we should be in good territory by the end of the year. As far as
so slippages sub 1,000 crore, and you're saying the recoveries and upgradations per quarter should be 2,500 crore?
Absolutely, absolutely, you're right.
Okay. Thank you very much, Mr. Das, for joining in. The street likes these numbers. The bank has gone ahead and revised its loan growth guidance higher. They're now saying conservatively they will at least do 12%. Their earlier guidance was 8 to 10%. They're well on track to bring down their gross NPAs well below that 8% mark. And look at the way the stock is rising. But numbers from HPCL.
Yes. So I was just taking a look, and the EBITDA loss seems to be lower than estimates. So does the net loss. That is because the company has accounted for a one-time compensation for under-recoveries of LPG to the tune of 5,617 crore rupees. Remember, we had indicated that this could be a possibility after IOCL. HPCL could also report a beat on numbers because IOCL had accounted for 10,800 crore rupees in terms of their subsidy amount. 5,600 crore rupees is done by HPCL. The government had allocated around 22,000 crore rupees. So that means the remaining 5 to 6,000 crore rupees will be accounted by BPCL in its results this time around. So that is one of the reasons why we have seen a decline or a lower number as far as their net loss and EBITDA number is concerned versus the poll. Yes, quarter on quarter the loss has also come in lower. If we adjust for this number, losses would have been around 7,000 crore rupees for the company. On the back of which we are seeing a spike in the stock, but important to remember, it includes this one-time impact. The company says that for April to September, their gross margins are $12.62 per barrel. I'll be calculating the quarterly margins in just a bit, but this does not consider the impact of the export duty that the company has seen or the windfall taxes that the government has levied on these companies. So strip of that, we'll have to look at the amount because reported numbers are looking much better, but a lot of adjustments here, Rima. So I'll just make those calculations. For now, the stock again has come off from the highs because these important internals are to be tracked.
Okay, so we'll give you that time, get into a break. We'll come back with more analysis.